Hello and welcome to Macro Mondays, brought to you by David Gockstein. I'm your host, Landy, and today is June 8th, 2026, and we had a pretty interesting prior week. I hope everybody watched the live stream on Friday with myself, Nat, and Bits of Wealth. There was a lot of really good information that those two came on here to provide, but today it's just me. I will have another live stream this Friday that will start at 8 p.m. Eastern. But the Monday video today is being recorded a little bit before the actual close of day, which is typically at 8 p.m. Eastern, 5 p.m. Pacific Standard Time. But this will go up at 9 p.m. Eastern, 6 p.m. Pacific Standard Time. And this is something that I'm going to be doing a little bit more of on Fridays, is bringing on some guests to take a look at markets and see what their view of the markets is and how they are seeing things on their charts as it compares to what you already know I'm looking at. And in this case, Bitcoin came down to a very key level. I have the monthly pulled up here because I wanted to note that generally speaking, the 58 to 60 area that we were originally looking at on any break below $80,000 has now fully been tagged. And in this case, we see that that is the lower second standard deviation on the monthly time frame as well. Now, typically when looking at a Bollinger Band set like we are here, this is just a modified Bollinger Band set with three standard deviations away from the mean. Typically, when you're looking at a regular set of Bollinger Bands, you're only getting the upper second and lower second as the lower band, as they're typically labeled, and the upper band. Those are two standard deviations away from the basis. And in this case, the basis is the 20 simple. I have 1, 2, 3 to the upside, 1, 2, 3 to the downside. Now, for anyone that's familiar with Bollinger Band volatility metrics and how Bollinger Bands work, typically the upper and lower second standard deviations are going to be reversal zones on a close. They typically act as areas of support when moving from an expansion into a compression, and resistance when moving from expansion into compression. And in this case, the first strike at it, getting a little bit of expansion now to the downside, but unless we see a close below the lower second standard deviation and the monthly close open higher low structure over here at, to be fair, right around $59,000, which was pretty much perfectly tagged here, then, we're looking at, potential lower term time frame reversals first pass. And that's what we've seen, a nice little bounce essentially on the daily. And if we do see a close below here, that would initiate the expansion. So what would we need to see? Well, close below the close open higher low structure on the monthly here. That is, of course, below the lower second standard deviation of the Bollinger Band set. And the reason why I have third standard deviations to the upside and downside here is because let's say that occurred this month. Well, we'd get expansion down through, and you would see that the Bollinger Bands would react in intra-month before the close. If we did start to see it moving down below here, you'll see the lower third stretch. And then wherever this stretches out to coming into, if let's say that were to occur, anywhere that stretches out to coming into the actual monthly close, that would be the area that I'd be looking at as the next viable area on any closes below the lower second standard deviation, which again would be stretching out, especially if Bitcoin trades below it, more towards the $58,000 level. Doesn't change too dramatically unless we get price just dropping like mad through it. While the monthly candle is still open. So really critical zone for Bitcoin here. There's a lot of speculation being passed around on timelines on various social media platforms saying like, oh, okay, this is definitely the macro low. This was the sweep of that macro low. So this whole area is going to become the macro low. There's nothing saying that is the case right now. In fact, it's pretty well stacked against Bitcoin at the moment in terms of this area around 60K becoming the macro low. But at least it is an area of support that is worth watching, that has the potential, if Bitcoin can hold it on closes, especially, that could form into a macro low, although that would not bar downside price action, right? Which means that 60K, well, it wasn't the macro low. We have a lower swing now. There were many that were saying 60K not going to go below. Well, we went below. But even if this kind of area or local zone were to become a macro low zone, that still provides for, at minimum, moves down into the, 50s and potentially even the 40s, upper 30s to 40s. Price can get very volatile. And I'm going to show you on the weekly what I'm talking about here. But in this case, we have a few areas of confluence, right? We're at the bottom side of this structure still, and we're within this structure from 73,835 to the $49,000 low. Big structure, right? In terms of the relative volatility, fairly low, as Bitcoin just kind of bled out sideways and down before getting the nice rally up. But in this case, this whole area is viable. And then you have the 49K spike high prior to the ETFs. The spike high came in on January 8th at $49,000. And that was a direct test of the prior cycle's bear market lower high on the monthly, right? We got a swing above it. And in that same candle, we saw for the monthly of January 2024, we saw a move down to another big area, that being the close open here at $38,500. In fact, 38,501 was the strike there. And that was the swing low here, 38,501, 38.5 area right at the monthly. So, this bottom side to top side, well, this just happens to be one zone. And then we have the zone right here, and Bitcoin's right at the top side of it, right? So essentially, after getting through this lower high, Bitcoin consolidated, retested it. So this whole zone at this low side structure is an area of support. So what we'd be looking at essentially is some interesting areas to pay attention to. And there's a few different ways that you can come up with these areas of interest inside of this structure. But you've got the swing high to the close here. But in reality, I should say, I would entertain the area all the way to the close open there, which is right around $45,000, $46,000, which is this area here, 45 and a half. Right, to essentially 58. You can take the swing and these two swings here. But again, I like the closes. This was a closing pivot point. This was a closing pivot point. So closing lower high with a swing lower high, right? This was a pivot point between these two areas on the way up. This was a swing high, closed, ripped right through it. And then we had a swing higher low, essentially right on it. And right on that 48 to 40 to $49,000. Big area of interest all the way between these closes. So this area is viable. And you can see that where the lower third standard deviation is now coming in, or was coming into this area here at the 45 and a half area right there, right? Because now Bitcoin has pushed into the lower second standard deviation, this monthly higher low close. And, it's already lost and is trying to hold these highs over here, right at 63,215. And then the close open high here at 60. I'm sorry, this is right around 58. Sorry. So essentially, you can see that this area is right there, 58 essentially, right? So we have really clean levels, to be honest. Like, you have this first top, and then you have the second top here, that many are looking at as an area of interest, but we've already kind of swung into these areas. We've tested this top, we've tested this high, we've tested this higher low close open, right? So essentially, this whole area is a big liquid zone, and something to pay attention to. If Bitcoin were to start closing down or even dip down, like realistically, when looking at Bollinger Band sets for Bitcoin here, you have to understand that it's about the close. So if we were to see a swing down, I would be looking into this area as being viable, maybe even a swing down into the 42s, right? We have the close open right here at 42.5. There's also a weekly close open here where the lower third is, but this would be the primary zone. You can call it, more conservatively around, 48 to 58 right here, right? But for myself, I'd be looking 45.5, 46K or so to this 58 right here. And this is going to be an area of significant interest. Why? Because after the dip down to 38.5 post ETF launch, look at the candles that brought price up. That was all the buying from the spot ETFs. And then, of course, we saw a peak in buying pressure here with a new all-time high prior to the halving, and then a dip down to fill this area in. Again, primarily driven, in terms of demand, primarily driven by those spot ETFs and all of the inflows that they saw, causing the AP to go and buy up Bitcoin supply. And now we're retesting that. This would be a big area. I would expect to see a lot of demand, so it's not surprising to see a bounce off of this area. But I do think, based on what I'm going to show you here on the weekly, I do think that we see a leg down, even if it is just a swing. So something that I would pay very close attention to is the expansion into compression, right, here on the weekly. So we had the big compression at the highs, first leg of the expansion, revert back to the mean, big expansion down, and then we trended sideways and up, right? A little bit of a shorter term uptrend relative to the larger downtrend here. I know everybody's drawing their trend lines there, right? But this was a perfect retest of what area on the monthly? Well, that would be this higher low right here, right? So we just tested that. And when looking at the weekly here, we are now moving into a compression. So we have the upper second standard deviation now above this last higher high on the weekly. We have now broken the higher low structure. So be aware, 65K, obviously this was a big area last cycle. It was the first high put in from the last cycle here. I'm going to make this red so that we can visualize the shorter term trend. We had a higher low to a higher high, right into a monthly retest, in this case a bearish retest, to a lower low. So expansion to compression. And if we do break down below the lows now, that would put Bitcoin below the lower second standard deviation. If we get below that monthly, well, we're going to start looking towards the mid 50s, around the lower third standard deviation initially, potentially even low 50s, all the way down to these swings, right? So all the way down to 49 to 48 to 49K. So you could come over here and you could take this high. It's kind of splitting the difference there and gives some room for the weekly. But this is an area of interest inside of this wider zone between the monthlies. So, but you got a $10,000 zone essentially there to the prior bear market, the prior kickoff of the bear market with the lower high in the monthly. And then on the way back up, you've got a common swing area right around 49K. I mean, nearly on spot, nearly to the dollar. I mean, it was basically a direct hit right here. So if we were to kind of call those areas out, you see this 49K pretty much perfectly retested. This is going to be a big zone. So between 48,240 and 49K, essentially up to 58K, big area. I would not be surprised to see a nice move down in there, and potentially even further to the bigger area here at 45. You've also got the weekly higher low structure over here, right? So, coming in around the 41.5. You've got some areas over here at 42.5 from this structure from the prior cycle. But realistically, this is the big zone. This is also the big zone that if Bitcoin expands into, you need to see hold, or else things are going to get pretty aggressive down to that monthly at 38.5, which is the bottom side of this structure over here. So that's what I'm looking at right now. Expansion into compression on the weekly. We are, of course, we are going to likely see, unless this is dropped, right? Unless this drops like in this week's candle, we're going to likely see the bands start to trend, more aggressively to the downside, but we're going to start seeing them flatten a bit and maybe even head back down on the weekly here, depending on where Bitcoin closes, as long as it's above that that lower second. The upper second likely going to continue down. But here's the thing that you need to understand about the weekly right now. Easy. We can just look at the trend, right? You had the higher low structure with higher highs up here on the weekly. We had a lower high. This is a lower high to higher low to higher high trend break, right? Not abnormal. I'd mentioned that the setup was bearish coming into those overhead resistances, 78 to 80, and then that the monthly 82.5 to 83. And then above there, even further up, 85 to 86, another big weekly. But right now, this is very simple. What Bitcoin would have to do right from here, right now, if this was going to be bullish, it's got to bounce aggressively, stay inside the range. But more importantly, you'd probably want to see it rally up above that upper second again and break back above, causing a deviation of this uptrend. That would look pretty interesting. Not my first take on where things would head, but it is something to understand. So I'm going to illustrate a little bit of what I'd be looking for, right? If you want this area to be bullish and turn into a macro low zone. So we have the uptrending structure here. We have the trend break, which you'd really be looking for is something like this, right? That would carve out. That's not my first take on what would happen. It would probably have to consolidate longer and form a different type of a pattern for reaccumulation. But my point being on closes, what you'd be looking for is, for this to become a deviation and this to be bullish for this area right here, right now, and not go lower and get another leg down, you'd be looking for a break back above the most recent higher high, in this case on the weekly at 82.8. So right between our call at 82.5 to 83K, higher high, higher low, or equal low is fine, but higher low and then come up and take out that higher high. Typically, you wouldn't want equal lows because then it's got to go just as far, if not further, to go and take out a higher high. So what you'd be looking for in terms of a prime setup would be something really akin to that. And this not being the low here, but maybe taking its time going sideways for a while and dip down. But this is not, I'm not going to sit here and draw up schematics for you. Point being is it's a trend break. So right now, what do we expect? Either continuation or a bounce to another lower high, right? That being, with the trend break down, you're either looking for continuation down, or if we do bounce on the weekly, then you're looking for another lower high, maybe even up into the 70K area, or, wherever. This is just an example. And then seeing something like a move down for another leg down or something, somewhere in there. And that would be on expansion. And weekly expansion is no joke. Monthly expansion is no joke. And understand that where Bitcoin is right now on the monthly, that lower second standard deviation we just hit on this candle. So this candle right here, this low, this 58,000 to 58.8 is vitally important for Bitcoin at this particular moment. You would want to see a dip into it and not closes in it on especially a monthly. Weekly can close in there and fill it out, and if it bounces back and starts closing above it on a monthly time frame, looks great. But this This would kick off monthly expansion to the downside if it started closing below 58. And at least the etchings of it, or a higher volatility environment at minimum, right? So on a macro time frame, yes, I know this was volatile. It was a volatile move down, but when looking at, monthly, quarterly, not very volatile. And it's in a compression. So I wanted to cover this kind of in depth because it is such a crucial area to pay attention to here. And what I'm going to do is pull up my normal schematic here that I've been showing. Schematic, it's not a schematic, it's a freaking chart. I don't know why. This is what happens when I'm hanging out with people that are talking about schematics, because Wyckoff is continuously coming up these days. And it's like, I'm not, look, you can tell what an accumulation and distribution structure are. There's variations within different methodologies for analysis, Wyckoff being one of the most popular being used. It's also very easy to understand. So it's often used on social media a lot. But I wanted to point out, so we've got the zone that I've been looking for tagged, right? Next big area is mid to low 50s. So 50, anywhere around the 56 to 52.5. In the middle there, right at around 53.5 to 55, there's weeklies, but the whole overall zone is 52.5 to 56, basically. Lower third standard deviations in there. If we start to see Bitcoin closing below the low and the lower second here, which, by the way, it can close below the lower second, but if it sticks inside these swings, especially 60K, it's wick filling. Maybe it comes down for a wick. But if it's closing inside of that lower second standard deviation, it's not going to kick off expansion. You want to see close over close through the area of support to hit that expansion to the downside for continuation of expansion. In this case, lower third would be right around $55,000 to $56,000. If we saw Bitcoin starting to push below 58, you're likely going to see this start to turn down towards the lower end, 52.5 to 54, and then eventually 48 to 50, quite honestly. And then, of course, 48 to 40, as I just showed you, monthly lower high from 2021 that became the first pass rejection just prior to the ETFs launching in January of 2024, which then also became the higher low after just putting in a new all-time high at 73,840 or 835 on spot price prior to the halving. So big area of interest between 48 and 58. Again, I've called out that I believe that we should, and I'm gonna put it on here as well. We should be calling out this area, the 45.5 there as well. So being that monthly area. So I mentioned, when I was talking about, the rubber hits the road with 70 to 72. If it's lost, you can look for, the save our shit level in the daily at the 68 to, basically 68 to 69,000. Well, the bulls, tried to hold up, not even on a 12-hour close open right on it and then boom down. And realistically, where am I looking next? Essentially, this is an aggressive expansion, last lower highs all the way up here at 74.1. Essentially that daily overhead resistance with Bitcoin is perfect on the way down. Once it hit that 70 and dropped it, it was just boom, 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 right? Little pause at 68 to 69, shoot through it, and then right into the 65 to 62.5 area. Bitcoin did come up here and then grab back onto the 62.5 daily level above 65. You look at 66.5, but I'd be looking maybe even up to that 68 to 69K and potentially even 70. And above 72 is where things would get interesting, but I'm not looking at that as being the most viable outcome from here. And here's why on the daily, 65 is going to be kind of a breaker on the daily, I believe from here. If we do continue to see this bounce above 65, you can see it's kind of daylight to that 68 to 69K, potentially roping in 70, which of course is the top side of the initial bounce off of 60K down here, right? Nice reaction up, and then things trended down to make the 65 to 62.5 low area there. So with the band setup getting above the confluent area at the lower first standard deviation, it is going to open up this purple zone 68 to 69 to 70. So you call it 68 to 70 essentially. This area here to the bottom side of this now resistance, right where this bounced on the daily before breaking down. All right, to the bottom side, we start losing 62.5, and this is not a closed candle on the daily yet. I would be looking at the lows being viable again. Lower second's going to expand down into 58. It's right now at $59,000. This is at close today. This is going to expand down as we see the basis drop likely below the 70K area, or right around $70,000. 70,500 is this line. We probably see the basis at it or below it at 70K. Lower third standard deviation is going to get its continuation down to likely somewhere in here, maybe 52.5. Might start to, it depends on the read for volatility, but I think it's going to start to maybe base out in this area between 52.5 and 53.4, 53.5. We will see the the lower first continue down into this zone at close today, but realistically above there, 65, we're looking 68 to 70 essentially. Initially, 72 changes some things here in the near term on the daily if it was able to close back above 72 up here. And yes, it's all Bitcoin today. I'll talk about oil and the rest of the markets, equities and stuff like that. I will talk about that on Wednesday. I think it's important people understand what's going on here first. Look, this would be a bounce. All right. So many are going to be like, I called the low. I told you it was going to be 60K is the low, and it's just going to rip and you're going to melt face. You missed it. You're stupid and bearish. It has nothing to do with being bullish or bearish. I'm actually fairly bullish on a further upside move. Whether it begins to really etch itself from here, I think is going to depend on closes above $65,000. Now, again, I'm saying closes relative to the daily. In this case, if we go to lower term timeframes like the 4 hour, that's a big old, man, it's not quite a bear flag, but it's an uptrending structure that if it starts stalling out here and can't make it above 65 and use the entire zone as support, 62.5, and just hangs on the bottom side, it's more likely going to fall. If we see it anywhere below 61.5, we're probably running the low. So then that's from the 4 hour, and this is probably going to start turning. Yeah, this is going to start turning on momentum. Doesn't mean that necessarily it's like a death sentence or anything for it, but realistically, you'll see, high side structures probably going to be put in. No real big like divergences from this trending structure right now. But from prior structures there is, right? So like this area here is going to keep throwing, continuation drives to the downside kind of a thing. So hidden bearish divergences. Between these highs though, there's nothing showing any bearish divergence just yet, but it's going to be pretty simple. You drop 62.5, we're going to be testing, 62, 365 at this low. Down past there at $62,000, you need to be very aware of this higher low on the 4 hour, because if it's dropped, we're testing down towards, we're testing down under 61 towards 60, and this liquid zone down here at 58 to 60. So just be aware of that. And, you'd want to see it consolidate, kind of get a reset here and kind of just bounce around in these areas, and maybe even try to break above and use this zone preferably as the area to kind of fill out for liquidity, and then break back above towards 68 in earnest. But at the moment, not really seeing anything too crazy here that would point me in that direction. What's the 6 hour say? 6 hours says expansion to compression. Yep. Yeah, drop the lower first at 61 right there with the 4-hour higher low is right there. We're heading right back to 60. Get above. This is going to be tough. Yeah, we would need to see closes above and start to really go sideways without dropping around 62 to 61 right in here. Right in here. If you start seeing it trade towards 62, be careful. Check where this is kind of closing, because it'd be losing 4-hour structure if it drops that area around that higher low. So 61. So I would have eyes on if you see anything below 62.5 to 62,000. Keep a very close eye on that 4-hour higher low structure. 12-hour, nothing crazy here. I'd actually like to see more bullish divergence or start to see bullish divergence form. There's nothing there yet. So this is still a move in progress. And below 65K, it's going to remain that way, likely running the lows or continuing to try to run the lows below on any daily closes below 65K. So pretty simple, actually. For everything that I just said, just understand I'm taking a live look at it right now. I've been busy all day. For anybody that's been asking me, like, oh, did you trade it? Yes, I did trade it in lower term timeframes, but that's not really relevant. What's actually relevant is that I finally got my 60K spot order filled, because the last time that we ran down to 60K, 58 to 60 was the zone we were looking for. It bounced at 60, and there were so many orders, I'd never picked mine up. This time, I think 60 and under. If we get 60 again, which is very highly likely, and under, which is very highly likely, it's not a foregone conclusion again, but it's very highly likely. I'm a spot buyer for as far down as it goes, whether it's into the 50s or whether it's into the 40s or the 30s or the 20s or the 10s. I'm a spot buyer the whole way down. Below 60K, I even said this before, below 80K, I'm a buyer. We ran down into 60. I bought 70 along the way. I bought 65. Now I got 60, right? I'm fine with that. And this is where you better have a plan for how you're going to accumulate. There's people who are buying the run up, not they weren't laddering in orders on the way down. And this is where you got to understand how much you got to ladder in and what it is that you're looking for and where you'd like to place those. And if I've had people ask me over and over again, well, what if 60K is the low? What would you do if it starts to just rip? Well, quite frankly, that's pretty simple. If I see a structural change off of the lows that looks like this is going to become a macro low area, which I was of the opinion that it was not, and that opinion turned out to be correct, right? I think that anybody objective and paying attention would understand that I was very, very much telling you that this was a bearish setup on this move up, but I'm a spot buyer back here and lower again. And in this case, I keep getting the, well, what would you do if this is the low? Well, if we were to do something like this, then we're going to get something like this on the weekly, and I'd be a spot buyer there. Well, why weren't you a spot buyer here? Because the setup was bearish. And why would I be a spot buyer here? Because if we break the downtrend, if we break back, whatever this looks like on the leg up to take this lower high out, relative to 98,000 in this case. So we have two relative highs. We have a higher high within this local structure, right, at 82.8, but a lower high relative to 98. What would make me want to buy a higher low off of any kind of structure, whether this be there's another lower high in here, but the leg up that takes this area out, whether it be a deviation or a trending structure up, higher low, a lower high to higher low, so an internal structure that would look something like this. Some sort of an internal structure that would go, something like this, to get to this area here that creates a higher high relative, whether it be a deviation of trend, go and take it out to the upside. is the compression, right? So whether it be, a lower high in the weekly and then, local lower high and then higher low and then back up, that creates this higher high above 82.8. I would be looking for that. And then a trend, any kind of a move back down or the next move down, no matter where this went, this high, the next move back down, once it starts to set that low or get into a low area or test supports there and shows potential for being a higher low, relative to either an internal structure or this low, then I'd just readjust my accumulation, right? Boom, put some down there. There's no problem. In bear markets, we typically get some time. It's bull markets where they run away from you to the upside. The transition even into, from a bear market to a bull market typically takes some time and gives you plenty of opportunity. You just have to be here to experience it. Most people go away during the bear markets and then they come back in the bull markets and look at everybody and say, oh, you're just lucky. No, they're present with a plan, right? Just be present and have a plan and you'll be just fine. And for those that are scared about, traditional markets are ripping and Bitcoin is dipping and why is Bitcoin's not preferred asset, blah, blah, blah. Bitcoin was never even a part of that conversation before. And the fact of the matter is, now the conversation has shifted to everybody in TradFi that had Bitcoin, Bitcoin ETFs in their portfolios. They're just dumping it out. No, they're not. Half of them don't even know. And in fact, most of them are looking at a brokerage account they're looking at whoever's managing their account in many cases, and they're going, well, I am like massively up on the stock side. I only have a little bit of these IBIT shares or whatever shares from whichever your favorite or not so favorite spot ETF is. And they're looking at that and they're going, okay, well, yeah, that's down, but that's opportunity, right? They don't even, they're looking at their portfolios. Oh, they're so down. No, if you have a stock portfolio with IBIT in it, that's a small part of your portfolio, especially if you have a brokerage firm that's managing that, right? Or a broker that's managing it for you, a portfolio manager. You're looking at your portfolio going, my stocks are up. Oh my God, my investment accounts are up so much. Oh my God, this is great. They're not even looking at this. This is bigger players that are, getting wiped out there and having to sell and have the AP do the redemptions. Right. So, and I think that any lower than this, as I demonstrated earlier with some of the charting, I think is a demand zones. I mean, even if you are, you'd be following the guidance from the companies, obviously. Right. But with those products, any kind of portfolio manager is going to be looking at that going, I mean, we've been taking profits over here. We might as well buy some discount, right? You buy discount, sell premium. So that's discount versus the massive amount of premium that you got on the other side, buoying and really making portfolios just expand and explode. So yeah, I mean, and for people that think like, no, they're going to get scared out of buying it. Like that's stupid. And I would point them to things like, oh yeah, were the portfolio managers and the money managers scared out of buying this? Were they scared out of buying this? Like, give me a break. Anyway, I'm going to wrap it up. This has been a longer video, but I think that a lot of what I said needed to be kind of re-clarified as we come into some important zones for price action for Bitcoin. Very Bitcoin heavy, very Bitcoin focused today, but I hope I was able to illustrate what it is that I'm looking at. And I hope that you did find this helpful and you like and share this out there. And I will be back here on Wednesday, same time, at least for the upload. I might record on Wednesday after the close so that we can get an updated view of the bands. But as it relates to the support and resistance zones of interest, but on Friday, I will do another live stream that will be at 8 p.m. So today, obviously, you're watching this. It's gone up at 9 p.m. Eastern, 6 p.m. Pacific. Wednesday should be the same time, 9 p.m. and Eastern Standard, 6 p.m. Pacific Standard. And then Friday, I will have a live stream at 8 p.m. Eastern. And that will start at 5 p.m. Pacific Standard Time. I will also put out a post kind of reminding everybody of that on Thursday sometime. And whoever the guests are going to be, I will also highlight in there as well. So you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.